All right, if you're looking for some help picking your investments in your 401k, we got you covered. Brent Wilsey of Wilsey Asset Management joins us to discuss more on this. Brent, good morning. Good to see you.
Good morning. How you doing?
Doing great, thank you. 401ks. When you first get into a 401k, as I recall, they said, well, you want to get some stocks and you want to get some bonds and kind of balance everything out. What do you say? You're the expert.
Yeah, and this is so important, Jason, because there's like $6 trillion in 401ks across the country, about $30 trillion in retirement accounts that can be in rollovers and so forth. So very important to make these right decisions. And actually, for 2021, they increased the amount people can put into them. The limit now is $19,500. If you're over 50, well, then you do $26,000 for the year. But what people get confused on is they don't know what to pick, what to do. And then they say, well, I'll just pick a little bit of everything, or I'll just do this. Or it's so wrong to do that. You've got to do the right thing. So what you want to do, first of all, is understand what's available in your 401k. You have probably mutual funds, which are probably the most likely you're going to have, ETFs, and stocks. So I'm going to kind of focus on the mutual funds because people have to pick the right mutual funds and the right allocation for it.
Well, how do you know which are the right ones?
And then that's so important. This is where people really get confused, because what you want to do, and people make the mistake of having like 10 different mutual funds, 10 different picks. That is not what you want to do. You want to spend some time really looking closely at what is the best mutual fund or two in there that I can use that's going to give me the best performance going forward. And you've got to do a little research here. I mean, we do this for our clients. We will pick them out for them, but you've got to do some research if you're on your own to look at what the mutual fund is and the history of that mutual fund and what you see going forward.
Should you also look at the mutual fund managers?
You most definitely should, because this is going to be a big change. You can look at the past performance like, wow, this fund has done phenomenal. It's averaged 15% per year for the last 10 years. And then you look at the manager, well, he's gone. You got some new guy coming in. Also, too, that's called a star manager. There could be a co-manager. Sometimes there's a committee. You want to understand who's calling the shots on the investments that you're putting your money into.
Okay, what else should we know? Are there times when we can go in and tweak it if we don't like what we see? Is it always available to do that, or is it only at certain times?
You really shouldn't do that too often. Again, this is a long-term investment, many times for 10, 15, 20 years or longer. So don't get too antsy about trying to tweak it. But what you want to look at that fund, you want to look at a couple other things as well. You want to look at what is the fund investing in? Back in 2000, I think maybe now, people are over concentrated in funds where they got too much in technology. Technology goes down, oh my gosh, you could lose 20, 30% of your retirement account. So make sure you look at that fund that has a good diversification. And this helps you as well, because then you don't have to worry about, oh my gosh, how many different funds do I do? You can do like when we do it for our clients, we'll do maybe one good fund that's managed very well and put a certain amount in cash. And I'd recommend that right now, because you want to be cautious when things are high. So maybe have 80% in one very good fund and then 20% in cash, maybe just being patient, waiting for a pullback there. So you want to understand what's in the fund. What is the turnover rate? It's another important thing. Make sure that they're not buying and selling, buying and selling. Should have a turnover rate much more than 20 or 25%.
Okay, what if somebody works for a company and they've got a 401k going, and all of a sudden they don't work for that company anymore? They still take the 401k with them, but they're just letting it ride. And they have that mentality that, well, I have that money there, it's being invested. Do they have options other than just letting that thing sit as it is? I mean, can they do something else with that money?
That's a great question, because I tell people, when you leave your job, do not leave your 401k behind. Take it with you. You can roll it over to an IRA rollover. That gives you a lot more options than keeping it there. So whenever you leave the job, do not forget your 401k. Take it with you. And I also do want to mention, Jason, as well. Some people say, well, my company doesn't match, so I'm not going to invest in the 401k. That is a big mistake. The 401k is your best wealth builder. Even if your company doesn't match, please put that money in there. Again, you can put up to $19,500 into investment, get a tax deduction for it. Nowhere else can you do that.
Okay, Brent Wilson, real quick, do you have any seminars coming up? They're all virtual now, I know.
Yeah, actually, we do not. If people do want to watch them, we now kind of have them on our website. Go to our website. We have them running continuously. So if people want to see what we're doing, go to the website, smartinvesting2000.com. They can actually sign up right there for the webinar that we have running all the time for people now.
All right. Good to know. Brent Wilsey from Wilsey Asset Management. Thanks, Brent. Have a great rest of your weekend.
You too. Thank you.